In this seventh and final video for Chapter 11, we're going to be looking at ways to report stockholders' equity. So we're going to be looking at our Georgios example in here, and we're going to first look at their retained earnings account in 2024. We looked at the account at the end of 2023, and we had $155,700 in there. And then we did the stock dividend, which reduced the account by $51,200. So the last time we were looking at this account, we had a balance of $104,500. So if Georgios has net income of $83,000 in 2024 and pays cash dividends of $30,000, what is the balance in our retained earnings account going to be? Take a minute and compute that before you go on. So we're going to credit the retained earnings account for $83,000 in the closing process, and then we will debit it for the $30,000 dividend, and at the end of 2024 we will have a balance in retained earnings. Our 12/31/2024 balance is $157,500. So essentially the calculation we're doing here is beginning retained earnings plus net income minus dividends, and here that includes both a stock and a cash dividend, to come down to ending retained earnings. If we put that into a statement of retained earnings, here's what it would look like. Retained earnings plus net income, subtracting out both the stock dividend and the cash dividend, brings us down to the $157,500. If we take a look at all of our equity accounts in our ledger, we have a common stock account with a $960 balance. We have an additional paid-in capital in excess of par account for that common stock that has a balance of $90,340. The retained earnings balance we were just looking at, it has a balance of $157,500. We have a remaining debit balance in our treasury stock account of $1,350. And the balance in our additional paid-in capital in excess of cost for our treasury stock account is a credit balance. So let's look at just those last two accounts for a minute. The treasury stock account is a contra equity account. It has a debit balance, and when we put together the stockholders' equity section of our balance sheet, we'll be subtracting that out. But the additional paid-in capital in excess of cost for our treasury stock account has a credit balance, and it is the same type of additional paid-in capital account and will be grouped together with additional paid-in capital in excess of par for the common stock. So if we look at our 12/31/2023 and our 12/31/2024 stockholders' equity sections for our balance sheet, you'll see first we have common stock, and typically if this information is not included on the face of the balance sheet, it has to be disclosed in the notes to the financial statements. So typically you will see information about the par value of the shares and how many are issued and outstanding. So at the end of 12/31/2023 we had 8,000 shares issued and outstanding. At the end of 2024, we had 7,950 outstanding because we still had 50 in our treasury. So we've got our additional paid-in capital in excess of par stock account for 2023 and 2024. We only had a balance in additional paid-in capital in excess of cost for our treasury stock at the end of 2024. We've got our retained earnings balances, and for 2024 we are subtracting out that treasury share or treasury stock account balance. We can also put together a statement of stockholders' equity. If a company doesn't have a lot of equity transactions and the only changes to equity are net income and dividends, then we might just put together a statement of retained earnings. But if you have changes in your other equity account balances, you're probably going to put together a statement of stockholders' equity, which lists the beginning balances of all your equity accounts and describes the key changes in each of those balances and computes the ending balance. Like an income statement and a statement of retained earnings, a statement of stockholders' equity is prepared for a period of time. So here is a statement of stockholders' equity. One is for 2023, the other one is for 2024. So we can see that in 2023, we had 0 beginning balances across the board. We issued some stock, we earned some net income, we paid out some cash dividends, and then we had stock dividends, more net income, stock buyback, sale of treasury shares, and you can look across the board at how these transactions impacted our various accounts. So that pretty much sums up all you need to know about stockholders' equity right now.